Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com, and this is the Elliott wave update for the NASDAQ 100 for Sunday, August 29th, 2021. To just take a quick review, on Friday, we did get that very anticipated report from the Fed in their large Jackson Hole, Wyoming meeting. More of a conference. It involved bankers, investment bankers, and Fed governors, and everybody was there. And they basically came out and not really saying anything new. But so the market initially did sell off real quick and then rallied real quick and got itself up to, at that time, above 15,400. And it got up originally to 15,428, 429. And then put in a little bit of a down sweep and then just rallied for the balance of the session, selling off right into the close. So what does that do for our account? It pushed us above that 15,400 level, which is what I was looking for, but I wanted a little bit more of a solid push and then a rejection of those levels to give us some support or some indication that the highs are likely in for now. And that did not happen. And that leaves open still some additional participation for whatever the reasons they may want to attach to it, because the Fed is pretty much certain that they are going to start to taper this year versus starting next year at some point. So they're kind of making some readjustments. They did make a few statements on inflation, but nothing that really was comforting to me in terms of like that it's under control and that they don't feel it's going to rear up its ugly head, et cetera, et cetera. So I still think we're moving higher on a hope, a whim, and a prayer. And so, but being that Friday was also a weekly expiration, that may have something to do with how larger traders and large firms came out of that expiration, possibly a little bit too short or a little bit too long. So we get that little bit of a bouncing around right now. And now we wait for the Asian markets to open, and then of course European markets to open, and let's see what their interpretation of what everything that took place on Friday is in those other markets. Excuse me. But for us, what I now see, as you can tell, I put on some additional labeling, this being a wave 2, and it's in the wrong color, so let me just fix that so that it all comes out cleanly. There we go. So these are we're in a minute wave 5, and then it subdivides into subminute level, and that's 1, 2, 3, and 4. Now, what if this is actually going to be the 5th, and we're looking for it to maybe come up to 15,452, then it's going to be up for interpretation as to whether that is just minute wave 1, excuse me, subminute wave 1 of minute wave 5. I won't know. We're gonna have to again allow the market to tell us. Excuse me. So we need to leave open potential for another explosive rally that is going to move this market up into the upper reaches of those resistance zones and those upper targets. So we still have potential that we could get up above 15,500 and up closer to 15,600 before all is said and done. Now, how are we going to be able to determine as to whether or not this truly, by the time we get into trade tomorrow morning, that the highs are in? Well, the first that will come up is my ability to count on a subminute level 5 waves up. And that would be to complete, excuse me, we have a lot of fires up north and a lot of that smoke's coming down into the San Francisco area, and that kind of irritates the old throat and the lungs. But once we're done with the minute wave 5 and then the minor wave 5, and I'll pull this chart open so that we can see it, then what we are looking at, if that finishes that wave, we are looking for a start of that very large correction that I have been now anticipating for quite some time. I have been very detailed on counting all of these waves up on the minute level. But as we can see, minute wave 3 was quite extended, and it did travel very far. It was 600 points plus. So thus far, wave 4, if it ended here in this failure, is from 265, and if I got it, it's still like 200 points. So it still has lots of room to the upside before we would consider all of this done and said. Excuse me again. Now, here's our resistance zones for upside. 15,466. 15, oh, we actually have some in between. Let me go back down. We have 15,000, come on, tell me what it is. 15,452, 465 to 66, and actually I'll take it all the way up to 77. And then 5,500 to 5,509, 5,524, 5,532. That's a pretty stacked zone. So as I probably said in last week, that would be a high candidate for this to be finished. And actually that zone extends all the way up to 15,031. So yes, there it is right there. So we have 31, 25, and 09. So plus right there, there's the 09. So the zone really goes from anywhere in here all the way up to here. And then a very top side at 15,566. But then again, that goes together with this next zone. So you can see they get very thick. So there's a lot of resistance moving all the way up here. And so I think that it'll be a battle. If the buyers still want to come in and push and push and push, they are running out of sellers. So in other words, it's like, well, as this thing gets up into uncharted waters, and therefore we can't really base it on, oh, they're running it up to a resistance, they're running it up to this previous level. They don't exist. So it's going to get thin. The sellers are going to be harder to find. Because again, there's just nothing that's going to put a tag on it that it shouldn't go above this level. Until finally we find some sellers who are saying, well, that's enough, and they start to move in and reverse this trend. That's going to take a while. Now I am expecting a pretty much a pretty severe down swoop once that begins, because wherever this ends, what's happening is that we've got a lot of territory to cover before we get back down below 15,000, where all of this really started. So we're going to be looking like all the way back to here. That's the level. I mean, we've been above 15,000, and now we've been above it for quite a while in terms of trading time. And so it's going to be difficult to kind of take a read. So what we're going to have to do is be able to trade it via our moving averages as they start to break down. Now, on the 30-minute chart, they're going to start by breaking the 4, they're breaking the 8. That then gives us some room down to that 20. So once that begins, then I'm really looking that's got some support at 16 that may hold. But if the reasons to buy, if the buyers are kind of like full up and they're not coming back in, then there's no reason for it to even pause there. It'll just start to drop. So what can cause some of these little pauses and support levels would just be day traders, would be traders that are swing traders. They're selling above, and they'll be sure to buy it here because it is a Fibonacci support level. But I'm looking for at least the moving average to start to break down, 30-minute, hourly, and then of course the daily. That'll give us additional confirmation. But we start on our very near term, our short-term time frame charts. So 30-minute, it has to break here, there, and then it's a pretty clear shot down to the 20, which is just above 15,400. Now, I think that if the market starts to break below that, as it did here, it goes pretty freely. So again, without reason to step in and start buying, you're going to find that there'll be vacuums of just like no bids and sell orders coming in at the market, and they're just going to go to the bids. So we have the 20 right now at 15,400. Then we have the 50 at 15,368. The breaks there, the next stop is 15,300. And then we need to start moving out to the higher levels to find out where those moving averages come in, particularly the 200-day. So again, we're moving here, and the hourly 50 is at 15,347. A break there drops it to a support level, which it may hold. And that's at 15,256. And then we have the 200-day moving average on the hourly basis at 15,224, 15,204, which is a support level for the move going up. So if those levels are reached, particularly, excuse me, the 3A2 level, or as high as the 50 level, these may be support on the way back down, but I wouldn't expect it to hold. I'd be looking for these to break and for the market to start to break down. This is actually on the intermediate level, and that could be giving us some strong clues that this is done and that we're going to really be heading much lower. Now I can go out and let me just open up the daily chart so I can just give you more information to where I will be looking. So I'm going to open this up and we're going to see where this starts to break. Now you can see the distance between these moving averages. So that's why I keep an eye on the daily chart. So if the daily 4 is broken, it's going to start to show some slight weaknesses. But the bigger one is going to be here. If the daily breaks below the daily 8, it's at 15,279.280. But if it breaks below and closes below, now we're getting clearer signals of weakness in the market. Here's the 20. That, in my opinion, would start to seal the deal as far as highs are in. Look at the daily count. Same, but you're going to see how clean it is. 1, 2, and look at that nice 3, a 4. And we get that 5 in, I think it pretty much seals the deal. And as we start to turn, we're just going to get confirmation that those highs are in for now. And then we're going to be beginning what should take us through the balance of this year and into next year as a corrective phase. It's going to be a longer term corrective phase. It still is going to fall in an ABC pattern. And then we know from studying Elliott that those corrective patterns number upwards of 13 different patterns that the market can take and form. And now, if we're looking at a cycle level, at least a cycle level back down, then we would anticipate some stronger moves. So anyway, for tomorrow, I will be looking for continued upside until we start to get our moves down. And that will give us stronger signals that we're all in. And that's what I'm going to leave for today. The next update will be on Monday, the 30th of August.